Good morning and welcome to the Artisanal Spirits Company PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Andrew Dane, CEO. Good morning, sir.
Good morning, all. Thank you very much for joining us. And welcome to this presentation on the Artisanal Spirits Company. First of all, we're going to take you through an overview and intro of the business, a bit of a trading update, conversation around the strategic progress made this year, and then update on current trading 26 and outlook. And what's important to note is that at our heart, we're a whisky business. We've got a vision to be the home of the world's most remarkable whisky brands, all of which create and sell outstanding limited edition whiskies and experiences around the world. Now, our heart is the Scotch Malt Whisky Society. And in a moment, I'm just going to show you a quick video that hopefully brings to life that journey of a society bottle through our sourcing and our maturation, our creation, curation, the tasting panel, through to bottling them in our own brand and selling them to members around the world. So I'll now hand over and we'll play this short 1-minute video. Thanks. So that shows the journey of a bottle. And from a business perspective, the society has a global footprint, delivering premium, limited edition, outstanding whiskies to members through a direct-to-consumer model, primarily online, as well as the 4 fantastic member rooms here in the UK. Now, we often talk about SMWS, and I thought it was worth just pausing to talk a little bit about Single Cask Nation, which we acquired in 2024. Now, while its principle is well aligned with our purpose of creating and selling those outstanding limited edition whiskies, it's by whiskey geeks, for whiskey geeks, there's 3 key differences to the society which I think are worth highlighting. First of all, 2/3 of the footprint is based in the US, which aligns with our key strategic focus area. The second is that 2/3 of sales are through retail channels, which are not something that's really part of the core D2C SMWS model, but are a key area of focus as we look to grow and expand, since most people buy their whiskey through those channels. And finally, although 1/3 of the business is still in e-commerce, that e-commerce is not through a paid membership model. Anyone can go on the site, join the nation, become and buy bottles from Single Cask Nation. Alongside that, we'll talk later on about strategic progress, but another addition to the brand portfolio is Artisan Casks, which was launched in July of this year and is really targeting high net worth individuals with a luxury cask owning experience, but again, where people are buying a whole cask worth of bottles and enjoying some outstanding old and rare whiskies from across our outstanding inventories. So that hopefully brings to life a little bit of the group again. Now, what we'll show next is the headlines on the results. And obviously some mixed but resilient performance against a backdrop of what has been pretty subdued demand, reflecting that ongoing global economic and political uncertainty that's created headwinds. But what's important to note is that the reported results contained a lot of noise that we will talk through in a moment about what's going on in the US. But excluding the US, revenue declined by around 2%, little under £500,000, with a similar size reduction in EBITDA. And that's the basis for that comment about mixed but resilient performance. And excluding the US, we saw that resilient performance. In the US, we saw the distortion results, which Billy will walk through. But at our back, we talk about retaining a really substantial, high quality, high value asset backing of over 18,000 outstanding casks. And we continue to make that strategic progress in the US, with the launch of Artisan Cask, as well as the core SMWS proposition, which we will talk to later on. And all of that gives us confidence in our ability to build a credible path towards 30 million of turnover, double-digit operating profit margins, and cash and PBT positive. So I'll now hand over to Billy. Thanks.
Thank you, Andrew. Yeah, so Andrew's mentioned, and what I'll try and do in the next few slides is just bring the financial performance to life. And what I want to start with is a look at our revenue performance, and start with just trying to bring out how does that look without the noise of the US, and on the next slide talk about the US specifically. So if you look at the chart, basically our revenue delivery was around flat and has been around flat for the last 3 years. Now, there's recognition that the whisky industry has had its headwinds the last few years, and that remained in 2025. So within that resilient delivery, we've seen growth within single cask nation of around 10%. We've seen growth with regards to our cask sales, which grew double digit, about 13%. And we saw growth within our venues of around 8%, which is really pleasing performance in a difficult landscape. What offsets that to get to a position of around flat, excluding the US, is China. China continues to be challenging, as does wider Asia, to be honest, where that declined around 20%. But we remain well placed there, as hopefully those market headwinds start to turn to tailwinds. Not necessarily expecting it very soon, but if we get to a position where we're able to achieve flat to small growth, we'll be well placed to continue to get back to growth in the market. Within the Americas, what I'm going to try and do is pull out the 3 key elements within our numbers that the America impacts. So the 3 key elements being, last January we made a £500,000 investment with our partner to start the process of looking to move to a new longer term route to market partner where we could achieve savings and take more direct management. So that was a cost of £500,000. And then the other 2 in relation to the US government shutdown and the stock transfer provision were Q4 impacts. So noting that, as a reminder, we create 1,000 SKUs a year. Everything's very, very much more just in time. So when the government shut down in Q4, we couldn't get label approvals for the 2 shipments we planned to make. Now, those were 2 shipments at revenue of around £2.4 million and EBITDA of about £1.8 million. So we just couldn't ship them. When it reopened, the delay was too long. We could do an FY25. And then the final piece being that allowed us to accelerate the move to a route to market, a new route to market partner. And what that means is, as of yesterday, when that changed, there is a element of stock that we need to take back, which is valued at around £1 million. So we created a revenue provision of £1 million for that, which is EBITDA of 0.8. The sum of all that is a £3.1 million EBITDA impact to the group. So as Andrew mentions, when you take away that element of it, we are a lot closer to matching last year's 1.1 million EBITDA delivery. So if I then move on to the next slide. Oh, I think I see this one there. No, we're good. I'd just like to build on the US again, and Andrew will come to talk to it shortly as well with regards to our strategy. The US has been a tough market. There's lots of spirits majors you'll have seen in a similar position. But what the purpose of this chart is meant to show is we did see kind of growing decline at the start of 2025. But what we have seen is we have seen that come back. And actually in Q4 25 and Q1 26, we have seen elements of growth in the US market. So we think, again, we're well placed there to take advantage through a new route to market, through more direct management, and really try and achieve growth and turn the 7,000 members in the US up to a much higher number. And then if I just finish from a profitability perspective, what's key to this business in the last couple of years has been management of cost base, as we have had some challenging headwinds. So I've talked about the revenue. If I talk about the key points in this chart, gross margin is down around 7%. Around half of that is the impact of the US that I've just discussed. The rest of it, 3.5%, some of that a small element of that is to do with also the US and the fact we faced tariffs this year for around 100k. The rest of it is heavily linked to a product mix. We are definitely in a whiskey market where people are perhaps trading down in some elements. So we have looked to make sure that we have the range of SKUs available to meet a number of requirements. And there's a recognition that the gross margin in the industry is down a little. But without the US impact, you would expect that to be around the 60% level.
Yep.
And then lastly, I highlighted the importance of managing our cost base. You can see across commission, marketing, payroll, and other overheads, we've saved about £0.8 million a year. So that's on top of the savings that we achieved last year. And if I just dive into a couple of those quickly, from a payroll perspective, the purpose of this chart and that red box is to show an inflation-adjusted F20, our payroll base has only grown £0.4 million. Now, what that does is it excludes the impact of inflation of that period of time. It incorporates the fact that we now have direct management of the SMWS America team. Previously, we essentially paid for that through the third-tier partner, but through doing that, we have way more direct management in there, and that's where we believe we can achieve our strategic aim of growing the market further. And we've brought in new business of Taiwan and Single Cast Nation. Again, payroll brought in to deliver on key business segments. And then we opened Masterton Bond. So again, we have our own supply chain facility where previously we would have paid for third-party bottling. And then if I then dive down one place more, if we look at from F23, so F22 being the year where basically the business performed extremely well and we've seen kind of decline since due to the headwinds, we have reacted to try and manage our payroll cost base. And on this chart, you'll see two key bars to the right of 1.3 and 0.8. 1.6, where we have reduced our payroll by around £2 million through efficiencies. Now that's been required given the headwinds, but I'd also say that has been achieved through efficiencies and productivity in the business. So it's bringing in good new hires over the last few years, but also system efficiencies and tech efficiencies. I mean, being able to do that and still continue to do the work we need to do. And lastly, from a cost-based perspective, our marketing absolute spend has almost halved from around 3.1 to 1.7 million pounds. But importantly, we've managed to keep the recruitment levels at a high level. So in 2023, we brought around 13,000 new recruits in. In 2025, we brought nearly 12,000 new recruits in. So we're doing more with less. We are getting more bang for our buck, and that's important. What's allowed us to do that is clear focus on immediate return on recruitment, on retention.
Yep.
So we'll finish in the last couple of slides from our balance sheet perspective. So the loss in the year has impacted and has resulted in a net debt increase to £31.5 million. The other key thing being, as we've moved in the US from a shipments model to depletions model, there's been a catch up in FY25 to balance the cash element of that. But what I would say going forward is we are well placed going forward to deliver the profit we need to deliver and deliver around £500,000 on marginal net debt reduction. We are comfortable with the net debt if you consider, in a minute I'll come to the value of our assets. So we want to see net debt reduction. There are a couple of key things that will help. I've mentioned profit, which we're well set up to deliver this year. The other thing being, we have more cash than we currently need. The rebasing of the market over the last couple of years means we have a surplus of casks, so our investment in spirit and wood will significantly reduce, as it will in capex. So we are committed and planned to achieve a net debt reduction through all those areas. From a capital allocation, I've talked about net debt and that key focus on marginal net debt reduction. When we consider what the remainder of the balance is, I've just spoke about marketing spend. Now, marketing will drive growth in this business, so it's always a consideration for our capital allocation and will continue to be this year. I spoke about cask spirit and capex. There is a less need for as significant investment I've seen in prior years of £3 to £4 million, that reducing to around £500,000. And then from a strategic perspective, we're always looking at M&A opportunities where that's affordable based on a balance sheet. At the minute, there is no dividends planned, as I'm sure you can appreciate, given the current capital allocation position, but something in the future for us to consider. And lastly, our balance sheet is strong because of the cash spirit that we hold. Now, this is a reminder that what we bought the almost 19,000 casks on our books for is around £28 million. A couple of years ago, or 18 months ago, we got a valuation of a market value. If we look to sell those quite naturally over a period of time in the market, that gave a value of those casks of around £100 million. And every 6 months, we do a valuation by the bank with an independent valuer around if we ever needed to do something from a liquidated basis, and that came out at £50 million. So our cask spirit holding has a range of £50 to £100 million, and this is dialect. At the minute, our EV is at the lower end of that range. It's roughly in line with the bank value. I'll hand back to Andrew.
Thanks very much. So that hopefully gives you a bit of an insight into what's been happening with the financials of the business. Now I'm going to talk a little bit about the strategic progress we referenced. So at the start of the year, we talked about 3 areas of focus: private cask, America, and the SMWS proposition. I'm just going to talk a little bit about what's happened across each of those 3 areas. First of all, we launched Artisan Casks in July of last year with events in Monaco, Singapore, Dubai, delivered around 300k of sales last year, with that number already having been beaten in the first 3 months of this year. So taking the last 12 months number to approaching £1 million worth of sales from that new brand. And that's about nurturing and growing that brand, making sure that over time we're delivering the cask owner experience that feeds a nice positive feedback loop for those people to refer other people into the program, as well as become repeat purchasers. So that was launched last year. And obviously this year, one of the upsides is full year effect of that brand alone. Second piece, the US. Now, we've talked a lot about the one-off impacts on reported results last year, but I thought it was worth just pausing before we talked about what things we've done to say, why are we doing it? And the reason is that the US is the world's largest market for Scotch whisky and growing as a proportion of exports based on the latest SWA data. So it's almost a quarter of all Scotch whisky by export value. But particularly if you look at the ultra premium space, which is where our brands typically operate, it's as large as all the other markets combined. And important to note is our view that our presence, our own presence in the US is smaller than it should be relative to other markets. So we see an opportunity to double that business over the coming years, even without the need for significant improvement in economic conditions or market conditions in that market. So what are we doing about it? We acquired Single Cask Nation in January 24. That's been growing at double digits each year. As I said, 2/3 of that is based in the US. In January 25, we took direct employment of the SMWS America team, marketing and operations. In November, we announced the move to the next stage of the improved route to market, and that took effect yesterday. So all has gone to plan, and that is now live as of yesterday. And that should deliver $1 million of cost savings over the next 3 years, so £250,000 a year, as well as some other benefits like aligning revenue and cash with the depletions, as we have in all other markets, etc. So that has now been delivered, and good progress there. The final one is around the core SMWS proposition. And given the kind of changes in market conditions, we thought it prudent to step back and say, what are the elements of the business model make sense? What has changed over time? And some core tenets of the business were reiterated as vital parts of who we are. The Scotch Malt Whisky Society is a membership model. Only members can buy full-size bottles. But some elements we became more flexible on. So the absolute value of the membership fee should, of course, reflect what's the proposition and membership benefits in that market. So expecting members in the US to pay the same amount that members in the UK who have member rooms available doesn't make sense. So flexing that membership fee across markets more. The second is that we have products like membership and a bottle, which are for sale to non-members, but actually that product can be sold out with our own channels to allow us to get a chance to recruit new members. So it opened up new opportunities for us. Alongside that, we did an extensive piece of market research with prospects and looking at opportunities about how we describe what it is that the society is to people who haven't come across us before. And while at its heart, the society has a real community and membership feel that breeds loyalty, engagement, retention, and enjoyment, actually bringing people in with a whiskey first messaging. That message about VIP access to some of the world's best whiskies, individually tasted and selected by experts and never to be repeated, really resonated across every market. So we're now using that to build our marketing plans and process, and that is already coming through. Now, when we look at how we market this society, we look at it across 3 key pillars. I'm going to touch on progress across each of these: recruitment, engagement, and retention. So first of all, talking about recruitment, as Billy said, 12,000 members recruited around the world. That is, with the exception of 2023, pretty close to the record ever recruitment in the history of the society. And given that that was done with half the budget of 2 years ago, that's a really successful performance. And I want to flag out a couple of reasons as to what actions we've been taking to drive that and why they've been successful. So first of all, talking about the UK. So here on the right-hand side, you can see that graph of rolling 12 months recruitment. And here we've had success with new partnerships. For example, partnering with Amex, a partnership which had been built really successfully in Australia and was brought across to UK. We recruited over 1,000 members using Amex cards during an Amex campaign in the summer, and then repeated with a few hundred more at the tail end of the year. That's really positive because we're bringing people in who we wouldn't otherwise be able to reach. They're paying for membership still, that it was a positive CPA of the campaign, but also that it's replicable and scalable. So we can repeat that again in the UK, but also talking to them about opportunities for Germany or the US. Alongside that, as I mentioned before, taking that bottle and membership product, which is available to non-members, to bring them into the society for the first time. And that's now available on Amazon. So that was launched at the tail end of November, early December. Not huge, but recruited around 100 people through that channel in the last month of the year. So again, just adding other channels, recently added by a gift, other partnerships using these same principles to replicate and scale without the need for upfront marketing spend. So that's how it's coming to life in the UK. In China, another market that reached record recruitment levels, we've had really good success with the campaigns to date, and we're looking to build on them. So we're now using product innovation, new product development to drive recruitment. So we've listened to market demands of what resonates in the market. And on the left-hand side, you can see a label for a new product, which is a real sherry-led, sherry-forward product, which really works in the market. Alongside that in the middle, something more speaking to the legacy of the business. Those are coming out over the coming months to drive recruitment, specifically supporting targeted recruitment programs, and alongside that, some 35 centiliter products which have been developed in conjunction with a key influencer in China, and that goes live in June. So those products have not yet been released. They are to layer on top of the already successful recruitment trajectory in China. It is worth noting in China, obviously, that market has been in decline for a few years. It has fallen from a peak of around about 5 million of revenue in 2022 to closer to 2 million pounds last year. And that in that context, the overall business performance has been really quite positive. What we're now seeing is a bottoming out in China and return to membership recruitment and growth, which is usually a leading indicator of future revenue growth. Alongside that, then engagement. How do we engage the 40,000 members around the world? So while that number has been relatively flat for the last couple of years, it's up around 50% since IPO. And we engage with them across the 3 core product ranges: the signature range, single cask strength whiskies, each individually released each month, almost 1,000 new products a year. Alongside that, the Creators Collection, a new range launched at the tail end of 2024, sets of whiskies which have a story, a narrative that binds them together. The Peat Plants Collection, all bound together by a joy of peat and whiskey, but celebrating the differences between an Islay peat, a Highlands peat, an Orkney peat, for example. And then finally, Heresy, our small batch experimental releases, typically with a fixed strength, slightly lower ABV, maybe around 50%, as well as typically with a lower price point. And that's really resonated in markets like the UK, where it's up 30%, and China as well. Now, on top of that, we've built specific programs and campaigns to drive engagement. We've got a really exciting set of products planned for the Whisky Festival season that happens in May. So 41 casks under this theme of the festivals across the regions, and then a Heresy blend that brings together whiskies from across the region. So really excited to see that released next month. Alongside that, other ideas like new product development in relation to World Cup, 35 centilitre product that will be available to members and former members to bring people back into the society. So really excited about that. Click on. The other piece from an engagement perspective is a reminder of the importance of the venues to the business. Not only do they represent £4 million worth of revenue, but they represent a really important source of engagement. 100,000 visits to our venues last year. Revenue there was up over 7%, almost 8%, driven by an increase in the number of bottles being bought by members who visited, as well as an increase in the profitability as we focus on cost base and value. But it's also a really important recruitment tool, with almost 1,200 new members recruited in venues, which represents over 10% of global recruitment happening in those member rooms. So it's really important for brand awareness and recruitment. Final piece around retention. And while it has fallen from the highs of the kind of middle of COVID, when nobody was quitting any subscriptions or memberships, it remains very high, over 70%. But we think we can drive that retention even further, partly from making sure that that engagement, that people feel the value, that they understand why they are a member and wanting to stay with us, but also some specific tactical pieces. For example, we've relaunched auto renewal in the UK and EU, which was implemented last year. Now, it was implemented in Q2 last year. We've now had 10,000 people move on to auto renewal, but because it takes a year for that to flow through, we haven't had any of the benefit of that yet. And that will come through over the coming weeks. And what we know is when we implemented auto renewal in the US, we saw a 10 percentage point increase in retention, as it moves from a model where every member has to actively repurchase membership every year to a model where if people don't want to stay, they can leave, but actually makes it much easier for them to remain with us. And then in the US, we launched a member rewards program. So that was launched in November last year. It's had a really good impact. Over 1,400 members, about 20% of all the members in the US, earned some kind of status level. And you can see some of the badges you can get once you've been to your first event, once you've tried a whiskey from each of the flavor profiles, regions, etc. You can earn badges as you earn, and then you get rewarded for those using points that you can use towards future spend, etc. And that's been well received. As Billy was saying, it has actually driven membership back above 7,000 for the first time in almost 18 months. New membership recruitment in the market is up 25% in Q1. So supporting good performance in the market there. So those are the actions that we've been taking. And what they do is they build confidence in our ability to create a credible path to 30 million of sales, double-digit operating profits, and cash positive this year and PBT positive thereafter. And as we think about how do we do that, what are the blocks that build us to get there? They're across the core brands. The Scotch Malt Whisky Society, it's about driving brand awareness. Part of that will come through investment in marketing spend, but part of it comes through those partnerships, those new channels which we're using to expand our awareness and reach. Through personalization, implementation of a new CRM tool across UK and EU last week, 2 weeks ago, building on the new CRM in the US that was the year before, and China the year before that. And really working that along with personalization, where people who come to a venue, for example, get an outstanding personalized experience. How do we make that also true for members who engage with us digitally? Alongside that, new product development, which we've talked about. From a single cask nation perspective, it's growing at double digits, but there's scope for even more. It's a brilliant brand, great people at the heart of it. 2/3 of the business is in the US, but we're only present in less than half of all US states. So there's scope to expand distribution there, as well as new international markets where we're present in around 8 to 10 export markets with more to come. And again, product innovation opportunities there. From an artisan cask program, was only launched last year, so it's really about establishing and growing that new brand. From an ASC group perspective, talked about the importance of retail, where most people buy most whiskey, and it's something that we have lots of strength in direct to consumer. We are under strength on retail reach, so building that muscle, that commercial tool over time. And then from a people perspective, driving a whiskey first culture where we celebrate and deliver success through empowered people and then recognize that success. So that gives us confidence in a long-term path to success, and why we're still excited about the prospects of the business. So that personalization being a key tool, we're going to see more of that coming through. You will start to see and feel that it's already implemented in UK, EU in March, and more to come in the coming weeks. And then finally, where are we now? How's the year started? So overall, solid start in line with expectations. It is a mixed bag, so definitely a tougher than expected start in the EU, but a better than planned performance in big markets like the US and China, overall giving us some balance and in line with expectations. And that includes cask sales too, with a promising start to the year, delivered well over a quarter of the budget in Q1 with a significant artisan cask sales, trade cask sales, noting that we're up against quite chunky comps from last year, but good performance across there. And that optimism across US and China with positive performance in the first couple of months of the year, and that completion of the US route to market change yesterday that gives us further cost savings, further direct control and leverage in that core market, getting back to growth there. So overall, that concludes the presentation. I'm happy to move into Q&A now.
That's great. Thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via our investor dashboard. As you can see, we have received a number of questions throughout today's presentation. Can I please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Yeah. Okay, so I'll pick up on some of the questions coming through. So first of all, question about profitability. And the question, is there an expectation that the company can actually generate a net profit over the coming years? Question about the 30 million, and is that a realistic target over the next 2 to 3 year time frame? And the short answer to that is yes. Of course, the exact makeup of that, the time frame through to that path, is dependent on market conditions and how quickly we can deploy and how, the initiatives that are already in place and how successful they are alone. But yes, absolutely it is. And I think alongside that, what we have is a return to, decent, almost £2 million of EBITDA target for this year, a target of cash generation this year. So that is our ability to fund all of our own operating cost requirements, all interest servicing costs, all capital requirements, all investments in the growth of business, and still have a surplus of cash this year. I think that's a really important metric to be able to deliver. The next question was around cask sales and the 4.7 million generated in 25 split between trade and private casks, and did the sales generate a multiple of book value that was broadly consistent with the 2024 independent valuation? So the short answer is yes, it did. So while we don't have the split between trade and private, it is primarily trade cask sales in that mix. The vast majority of it, don't have the exact mix, right? But the vast majority is trade cask.
About 80 to 90% between
that. And alongside that, in terms of the multiple, over the last 3 years, we've sold £10 million worth of casks at an average of 5 times net book value. For context, the independent valuation, which was just over 100 million, represents around 4 times net book value. So in answer to the question, yes, it is broadly consistent with the independent valuation. It was slightly higher because of the profile of the casks that were being sold, slightly older, slightly rarer ones. If we look at some of the sales done so far year to date, it's some younger casks, lesser known distilleries. That's more like 2 times NBV, but overall broadly consistent with that valuation. Next question is about the bottle keep fee at Edinburgh venues and why that has increased, and whether or not it can be part free as part of the investor benefits program. So for people who are not aware, of our 40,000 members, around 100 of them have access to or pay for access to bottle keeps at the 4 member rooms, which is one of the perks that people have. They can buy a bottle and keep it there on site. It is difficult operationally, particularly things like it has to be served by bar staff, so it's quite problematic to operate, as well as making sure that it makes sense for the venues. The venues are not particularly, they are part of our overall operations of the business, and that this is something that we know that small number of members really value. but there simply isn't capacity to expand them. And we know to actually make it make sense, we're going to have to invest in that space, and that it is going to cost. But the cost is still relatively low. I think it's under £100 a year for the access to the fees. We did consider making it a part of the shareholder benefits program, but given that most of the members who use it are not part of that program, what we didn't want to do was drive them out of the program. Next question. Do you have access to lower cost SKUs to address the low end of the market while maintaining margins on those SKUs? Or are you happy to take a hit on margin on these SKUs to bring in trade? So it's a really good question. I think if we start with the other end, which is what's driving the behavior? It is people still wanting to buy really good quality whiskey that tastes great, have a great experience, but the price point that they want to pay for that has come down. They want it to be really good value. Now, what we're not seeing is discounting materially changing. So our absolute levels of discounting in core markets for last year was consistent with the year before. But what we are seeing is that people are choosing to buy an 8-year-old or a 10-year-old product instead of a 12-year-old product, or choosing to buy from a lesser known distillery, or choosing to buy something like Heresy. So we are absolutely changing the mix of what's coming through the tasting panel, what's being released to match that demand. So if you look at what is being produced in the first few months of this year, 30% of that product is under £70 price point, which is about double the mix of previous periods. So that is at a lower margin, just by virtue of it being younger whiskey. Older whiskey is higher margin just by virtue of its structure. But so we're happy to take that hit because we're delivering great quality whiskey, still meeting what people want, and that's the realities of the world that we're in. So we are able to meet that demand, but it will have an impact on margin, but we're just looking to manage that. Okay. One for Billy. When does the CFO expect net debt to peak? Refinancing announcement last September contained a comment that indicated belief that it peaked at that point. However, issues in the US have obviously had a significant impact. Does the CFO expect the Santander RCF to be fully drawn at any point this year?
I think we can say that net debt peaked in DEC 25 from a full year perspective. I think the Santander RCF was a great addition last year. It gave us a bit more headroom. It gave us lower costs, and that's important. I think as a business, you go through peaks and troughs throughout the year, and that's how we manage those, through delivery of profit and management of cost. So yeah, I think as Andrew has said, and I have said myself, I expect net debt to drop by the end of this year as we deliver profit, manage investment in spirit and wood, and manage our cost base.
Yeah. And as you say, the phasing of that might bump around during the year, but overall commitment to reducing it during the year. Next question. Do you anticipate you'll be in a strong position in future years for purchasing new stocks of spirits? So first of all, if we think about our overall portfolio mix, we have the casks that we need. And in fact, we actually have a net surplus, no surplus of casks, maybe a few thousand casks that are surplus to our current demand. And obviously part of that is we want to drive demand because we want to be bottling and selling it. Alongside that, looking to realize value out of those casks. To the extent that we can, we will of course look at mainly reinvest in the business, look at reducing net debt, all of the things that Billy set out from a capital allocation perspective. But on that sheet was cask purchases. Now, there are opportunities presenting themselves now to buy great quality whiskey from distilleries, which we haven't been able to buy from for a long time. We are taking advantage of those opportunities, but at a relatively low scale. So we might buy £100,000 worth of stock of Beaumore's and Lefroy's when we might want that to be 10x, but we realise the realities of the environment which we're in. Also looking at opportunities for great whiskey, which we can turn around, that ready to go, it's good quality now, we can bottle and sell it now. So we will look to take advantage of genuinely exceptional opportunities to acquire stock, but in the context of the realities of the world in which we're operating at the moment. Okay, next question was around, in what ways are we empowering our staff? So the idea here is we have pockets, we have teams, we have individuals where we see great performance, where people feel that they have all of the tools, all of the resources, all the information, but also all of the accountability and ability to just go and crack on. We see that where we see people who feel genuinely empowered to go and just make decisions that's where we see some really good performance. So what we're talking about is making sure that we get to a point where people really feel empowered across all of the business. And that is about giving people the right tools, the right resources, right support, but also giving their managers that support, giving them air cover, support for the fact that there will be mistakes and that will be okay. But what we want to do is be nimble, be able to make decisions, for people to see and feel things in front of them, be able to say, yes, I think this is the right thing and I'm going to get on with it. And then communicating to people about what's happening so that they can reflect those realities. Okay. Next question is, can we have an update on India, please? I think you were just saying that we think the label approvals have now happened. So a bit like in the US, each individual product needs government label approval, but rather than in the US, with the turnaround time is typically 72 hours, it's been more like 72 days, maybe a bit more. So the first shipment is due to go shortly, and that the franchise will launch there this year. As a reminder, though, we do not expect the SMWS India franchise, the kind of direct impact, to be material on the group performance. Tens of thousands of pounds, not bigger than. So at this stage, it's about sowing the seed. It's about working with a new partner, testing which provinces work by, which hotel partners, what membership models, etc. It's testing and learning from those so we can build as the market continues to grow, as tariffs continue to come down, but it's not expected to have a direct short-term positive impact. By contrast, I think the overall Scotch industry is going to have a really positive impact of the reductions in Indian tariffs, because it is soaking up volumes of some of the excesses of cask that exist across the industry. So I think the overall India direction is positive for the industry, but the direct impact for us is relatively low, but it is progressing. It's just a bit slow getting into a market for the first time. What are the plans to get the brand known in the underserved US states? So actually here, because what we're talking about is it going through a traditional 3-tier model, it's working with our importer, who's really good, Impex Beverages, to expand our presence into other markets where they are already present. So getting take-up, getting allocations into other states. So we're working with them to support growth into new retailers in new states, but the wider infrastructure is already there. So it's same brand, working with that importer to expand into other states. Another question about India, which I think we covered. And finally, can you comment on the share price? Of course, we are frustrated about the significant disconnect between current market share price of something like 31.5p, giving a market cap of 25 million and an enterprise value of around 50 million, which we think is a significantly below the real value of the business. That's why we're, there to be buying shares, exercising options, holding, and believe in the long-term success of this business. The question then becomes, what do we do about it? And our view is twofold. First of all, the number one thing that will drive the share price performance is business performance. Focus on getting the business cash generative this year. Focus on driving sales in the areas that we think there's opportunities. In the US, with the launch of Artisan Cash, with the core SMWS brand, with the expansion of single cask nation into new markets, driving sales. And alongside that, managing the cost base. So you saw the steps that have already been taken. We've still got more to come from full year effect of cost savings already being enacted. So managing that, delivering the business performance. Alongside that, it's our job to then reconnect our perspective on value and the share price. We do that by engaging with shareholders. Today's event, good example of that. Speaking to 100 people to try to drive interest, demand, engagement with shares. We've just spent the start of this week in London meeting a range of investors, both current investors who we want to hold and expand their investments, as well as new investors who we want to bring into the shares. So it's our job to try to drive interest and investment intent alongside driving the business performance.
That's great. Thank you for answering all those questions you can from investors. And of course, the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. Just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Andrew, could I please just ask you for a few closing comments?
Yeah, of course. I think overall, we have a great business with great fundamentals and outstanding asset backing, really good quality brands with good footprints, distribution across all the key markets, an outstanding asset backing, and a clear path to how we build towards a profitable cash generative business. It is taking us longer to get there. We are frustrated that this year's results weren't better. And we be very clear, we are acting hard and fast to make sure we drive sales, manage costs, get that path to profitability. But fundamentally, we have a fantastic business with great outlook and great opportunity to grow and deliver value long term. I hope you join us for that.
That's
Thank
great. Thank you for updating investors today. Can I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company.
Yeah.
On behalf of the management team, we'd like to thank you for attending today's presentation, and good morning to you all.